Welcome. My name is Aaron Engelman from Two Teachers Tax Service here in Lyman, South Carolina. Today, we're going to talk about estimated taxes and withholding. The U.S. tax system is pay as you go. Taxes must be paid throughout the year as income is earned. There are two systems to pay taxes. There's the one that's familiar to many of us, which is withholding, where your employer withholds taxes out of your check. The other way that we put taxes into the system is by using estimated taxes. And self-employed individuals and others, especially those with large amounts of passive income, use estimated taxes to get the money into the tax system. Understanding the difference helps avoid IRS underpayment penalties. So let's understand estimated taxes. This is used when income is not subject to withholding. Taxpayer calculates payments using Form 1040 ES, and ES stands for estimates. Tax professionals can help calculate estimates and provide estimates as well as payment coupons. This applies to self-employment, contracting, interest, dividends, rentals, and capital gains. Payments are generally due on the 15th of the month, April, June, September, and then January of the following year. Well, let's talk about withholding. I think most people understand withholding, but there is some nuance. Withholding is income tax deducted from your paycheck. Form W-4 is used to provide your employer with withholding guidance based on your filing status, how many dependents you have, and what your other income might look like. This applies to W-2 wages, salaries, tips, and bonuses. So let's look at the difference. First of all, the payer. With withholding, it's your employer. For estimated taxes, it's the taxpayer's responsibility to pay into the system. The frequency. With withholding, every pay period, you're paying into the tax system. And with estimated taxes, it's quarterly. The source. With withholding, it's your W-2 wages. For estimated taxes, it's self-employment or investments. And the forms for withholding are W-4. For estimated taxes, it's the 1040 ES. So many of us use both estimated payments and withholding. So let's talk about that. There is something called safe harbor. So if you pay 90% of your current year tax or 100% of the prior year tax into the system, and this goes up to 110% for high income earners, you will not be penalized. If you'd like, you can increase withholding on a W-4 to cover self-employment tax rather than use the 1040 ES in estimates to get tax into the system. You can use the IRS tax withholding estimator to stay compliant, or you can contact Two Teachers Tax Service for guidance and calculation. Paying estimates, sometimes known as quarterlies, are one of two methods to increase the amount of tax paid to the IRS. Withholding can be increased or decreased depending on your tax situation, and remember, we use Form W-4 for that. Two Teachers Tax Service can do the calculations for you to help keep you compliant and penalty-free. Contact us at 269-449-8277 or by email at twoteacherstax@gmail.com. Thank you.